Hi and welcome to the Market Alert for Thursday, the 9th of December 2021. So bonds bloodbath yesterday, dollar dumped as Omicron anxiety ebbs and flows. An ugly day for bond and dollar bulls. Well, we'll look at that in a bit more detail shortly. Implied volatility down yesterday as the market continues to find a bit of support. It was sideways yesterday, obviously waiting for tomorrow's CPI numbers, which will be out at 1:30 today. We've got unemployment claims and the bond auction, but the big one, as I've said all week, is the CPI numbers out tomorrow at 1:30. Let's have a look at the Dow for yesterday, and we can see that the market's got some resistance. This is the price resistance off these highs. As I've said to you before, it's automatically in the software now, and again you can see the support on the downside. So drawing in the fib lines is a piece of cake. So we can see that already from here back down to here back up, we're already more or less 100%. So if we go from here down to here, you can see that the market's not closing above the 89 at the moment. But what I would be inclined to do is to well, we don't need these, so let's just remove these. Let me just put that back. A bit too trigger happy this morning. That's the second one down. There we go. So we've got this 89% in here, and then if we move up to the next one, which is where the next swing is, you'll see that we have a confluence of fibs here, which is why the market is struggling at this level. So again, it's well worth having these lines just to see where we'll get issues. And you can see there we've got above as well, which ties in here where there is also some resistance. And then ultimately, of course, you've got the top one down to there. And again, you can see we've got a 62 here, which the market's gone through. So we'll just remove these. And then anything above now would give you areas of potential resistance if the market is to move higher. However, on the downside, just in case the Omicron fear returns, and they want it to return, this is the downside targets of where you can expect to find some support should the market move to the downside. The first being the 38% retracement. So they are the fibs up and down for the Dow. And in the 30-minute yesterday, it was quite wild. I don't know why. I was going to say it's the wrong chart, that's why. There we go. So, yeah, in the morning, they managed to move the market to the upside. In the Dow, in the futures market, you can see the huge green bar. And then the market came back. And in the afternoon, when the Dow opened, it came under pressure for several hours before the market found demand. The had divergence in the stochastics. We're at the DP level, and then prices closed back above the 5-bar moving average, parabolic turn with it, and prices rebound there, which you can see. So the Dow currently sideways. You can see they're trying to make its way back to the DP and close above this. In the German DAX, let's have a quick look at this. Again, you can see we've got the resistance and support levels automatically marked up. This is for the real prices, so we might as well do the downside first. So if we get any weakness continuing today, these are the downside targets all the way down to the support where the market found some here. And of course, we've got the resistance on the upside as well. So from here down to here, you can see that the market is struggling with 62% there at the moment. So let me just drag these out and then get rid of the ones we don't want. So 62, and then we've got the 78 and 89 level there as well. So that's the up and down fibs for the German DAX in the daily. In the 30-minute for yesterday, as soon as I can spot it, there we go. Was again following the Dow in the morning, and then the market moving to the DP, similar to what we saw in the Dow, oversold, stochastics crossed, We've got demand coming into the market, holding the market at the DP level, and then moving to the upside there. Let's have a look in a bit more detail in the 2-minute overnight. At the moment, you can see prices really sideways as the market is waiting for the futures and also obviously tomorrow's news as well. You can see overnight that they've got a double bottom there, or an 89% retracement with divergence, and then the market moving back to the upside off the close. Bit of a rally up to the DP, and then bringing it back down to the close. Again, divergence with the green box. A lot of support down here with these lines as well. This is dragging. Good thing about these support and resistance lines is they're pulled back way back in the chart, so you don't have to go looking for them. So I can see that this cluster here is an important area. If I wanted to see that, I can just go up into a bigger time frame and see where it is. But I know it's significant because there's 3 of them in that area. So if prices do sell off and move down to this area, I will be looking for some sort of again oversold climatic volume action, and then look for a retracement to try and get along if the market was going to bounce off it. If not, if we go through, then we're going to accelerate to the downside as well. So very useful. The same on the upside as well. We can see that this ties in with the 200 MA. So as the market approaches this area, it's going to struggle as well. But at the moment, market very sideways overnight, and waiting for tomorrow's news, of course, for the CPI numbers. Quick look at the metals as before we finish off. We'll start off with gold, as that's already highlighted. You can see this moving up quite nicely. Not the same for silver, coming off the 89% retracement that we've had in for some time there. We're likely to see some sort of a pullback tomorrow if the CPI numbers are less than forecast. Well, we'll probably see a bit more than a pullback, more likely $100 move to the downside. And conversely, if they're bad, then you'll see it to the upside. But it looks like with a bit of selling around here at the moment that they're preempting that the numbers could actually be quite good, as we're seeing some actually sell out at the 200 MA in the gold market. In the silver market, not such a steep move to the upside, and if you have a look at the gold-silver ratio, you'll see why, because we're still in that 80-ish area. This will spike through here tomorrow as well if the CPI numbers aren't showing an increase in inflation. So silver, you can see why it's been quiet this week, because they are waiting for these numbers. Bit of support at the moment. Bit of demand down here, and we're oversold, but like I say, be warned for tomorrow's CPI numbers. Meanwhile, in the dollar, it's sold off, and again you can see the manipulation in the silver market, because we had a big move to the downside yesterday in the dollar, and we had sod all in the way of silver moving to the upside. Let me just grab a 30-minute chart. You can see absolutely nothing to shout about. And then overnight they've managed to bring the market back to 89% retracement, which you'll see if I just draw in from there to there, brings you right back to 89%. And we've got some buying coming into at this level, and we're oversold. So easy to read what's going on here at the moment. You can see that the market's gone up to 89% as well. And now is starting to trade sideways as well. But expect more sideways of the silver market, even despite the dollar bouncing there. It's interesting, isn't it, how they can move the metals down when the dollar goes up, but when the dollar has a bad day, they won't move up the metals. Incredible. And that's just because, taking the opportunity to actually fill the boots. Simple as that. Okay, that will do it for this one. Quick roundup of what's going on. And like I say, it's mainly a situation of the market treading water, waiting for tomorrow, at the risk of repeating myself. But it's a very important economic number for tomorrow. Okay, that's it. As ever, thanks for watching. See you in the next one.